So could bad news for the stock market be good news for potential home buyers? That's what we're going to talk about today. My name is Dan Free. I do this report on a daily basis to inform you guys what the heck's going on in the economy that might play a big role in when it comes to housing affordability. And when I talk housing affordability, I talk interest rates. Okay, why? Well, I'm a mortgage advisor in all 50 states as well as Puerto Rico. So if you're out there and you need help with a mortgage, maybe getting pre-qualified, maybe looking into a debt consolidation loan, or maybe even a reverse mortgage, we'd love to help. So the news out today is basically Dow falls 300 points as disappointing China data dampens sentiment. So the first thing when I read that, I'm like, this might actually be good news. What do I mean? Well, a lot of the inflation data that we're seeing right now, other than the shelter cost, is coming from energy. Okay, well, if you see China's economy starting to dampen a little bit, that means possibly could oil prices start to retract because oil has been on a rally in the last 30 days. It's up over 25%. So that's the first thing we want to talk about. But the other thing that we're going to talk about as well is the first thing I saw here is retail sales increased 0.7% in July, better than expected as consumer spending holds up. And when I read that data, I'm like, oh boy, here we go. The Federal Reserve just has more ammunition on increasing rates because they want people to stop spending as much. So let's tie all these two together. Why am I excited about China starting to slow down? Well, basically, energy. Oil prices are up 25% over the last 30 days, okay? That's going to be a big impact or cause a big impact in our CPI and PPI numbers. What those are, CPI numbers are consumer inflation. PPI numbers are producer inflation. So the last readings came in basically right in line with what was expected, and they came in last week. But I continue to focus in on oil because oil is rallying and rallying. Thus, it's going to push up our inflation numbers. So what you're seeing right now, though, is because of the slowdown in China, oil is down today. Well, it's really volatile. Oil is down today 2%. Just today alone based on the China data. Well, the other piece of the equation right here is retail sales. And like I said, this is the number that really freaked me out this morning. Because when you look at retail sales, the previous reading was 0.3. Economists expected it to tick up a little bit because it's school time and people are spending more money in the last couple weeks than they normally spend because kids are going back to school, kids are going to college, you're spending all that money, school supplies and everything else. But it came in actually at 0.7, so double where we were previously. So based on these two pieces of information, I'm like, okay, what's the bond market? How's the bond market going to react to this? So what we do is we go over to the MBS market, and you're seeing that right on your screen. And you might say, if you're new to the channel, first thing you're going to say is, Dan, look at that. Love the numbers. Look at those mortgage rates coming down. Well, if you watch my channel or videos on a daily basis, you're like, oh boy, that's bad news. Let me explain. What you're seeing on your screen is what's happening to the price of a mortgage-backed security, an MBS. Mortgage-backed security is a bond that trades on Wall Street. Its yield is the biggest component of your mortgage rate. Okay, what you're seeing on the screen is what's happening to the price of the mortgage-backed security. If you see it up through here, you're seeing it's up 0.06. Okay, you got to squint, but it's there. So what that means is, let me just explain this to you. As the price goes down, rates go up. There's a yin-yang, a flip-flop effect here. So when the prices are coming down, rates are going up. Today, based on this news, especially from China, we see the MBS market actually taking a little bit of a turn. If you go through here, you don't really see much of an uptick anywhere in the last week or two. But maybe we hit a bottom that we might be coming off of because a lot of this rally on the downside for mortgage-backed securities doesn't really make any sense. There's no correlation between this big drop of where we are right now based on any of the news that we have. So I'm going to continue to update you guys on a daily basis to figure out why the correlation is so off. But at least today, some of the news from China, which was dismal, is actually helping mortgage bonds. Basically putting a floor in right now for mortgage rates. So the 0.06 up in price of the bond isn't really going to do much when it comes to easing interest rates. So let's get over to where mortgage rates are. These are rates published by Mortgage News Daily on a daily basis. These are not my rates. These are not any individual bank's rates. What Mortgage News Daily does is they do a lot of this research for us, and they survey mortgage lenders all over the country and say, hey, if you had a borrower that had these 5 criterias, they're buying their first house, it's their primary home, and it's a single family home. Those three things. You have a 740 credit score, and you're putting down 20%. This is most likely where your rates are going to be. But you might be, Dan, my rate's higher than that. My credit scores are not there. I have a difference in opinion there. I'm not putting 20% down. What do you do? How do you qualify? How do you know what kind of mortgage rate you're going to get? Well, I'd love to be able to help you. My name is Dan Frio. Like I said, I do this on a daily basis. I'm a mortgage advisor licensed in all 50 states. If you'd like to reach out to us to talk about, can you get pre-qualified? Please don't disqualify yourself. Please talk to a professional mortgage advisor to help you through this process. How do you reach out to us? Well, it's pretty simple. You can give us a call at 844-775-LOAN. That's 844-775-5626. Or you can click the Apply Now button right over there. What's going to do is it's going to bring up a calendar, and you're going to schedule an appointment with me or one of my mortgage advisors just to go over any questions or comments or scenarios that you have before you apply for that loan. But if you're like, hey, Dan, I know what I need. I know I qualify and everything else. I just need your help. Well, please do that. What we're going to do is we'll just send you a link for the application, and you can get started immediately. So thanks for watching, guys. Sorry there's not too much economic data out today, but stay tuned. The rest of the week is going to be bumpy. Take care. Talk to you soon. Bye-bye.